Hey, what's up you guys? Welcome back to another video. In this video, I want to talk about a once hot stock Bumble and how it has fell from grace and down nearly 94% since IPO. This is a typical PE firm operation that pumped and dumped on the public. And in this video, we're going to take a deep dive into the story and how it all happened and what you can learn from it. So PE firm Blackstone made over $2 billion as the public got wiped out. It took advantage of the public and it refused to acknowledge that. Bumble, which owns dating apps Bumble and Badoo, when it released a Q2 earnings, it cut its outlook of revenue growth to a range of 1 to 2% from its prior outlook of 8 to 11% against average expectations of 8%. It said, "We are resetting our guidance today and reflect actions we are taking to position Bumble for user growth, deliver improved customer value, and drive long-term revenue growth." Shares was down 40% this morning to a record low of $4.83 a share, and later in the morning traded down 32% at $5.44 a share, down about 94% from the high on the IPO day. The Q2 earnings release follows the Q1 release that also featured a downbeat forecast, punctuated by layoffs and plans to relaunch the Bumble app and refresh the Premium Plus subscription. It went IPO in February 2021 amid enormous market hype and at the peak of consensual hallucination and market top. The IPO price was at $43. The first trade was at $76, making it a massively hyped pop. On the second day of the pop, shares hit an intraday high of $84.80, giving it a market cap approaching $10 billion. Shares have slumped and re-slumped ever since. The company's two dating apps went into different directions in terms of revenue growth in Q2. Bumble's revenues grew 4.8% to $218 million in the quarter. Badoo's and other revenues fell 2.2% to $50.6 million. Total paying users increased 14%, but revenues per paying user fell 9%. It did make money, unlike a lot of other stocks out there. Net income in the quarter rose to $37.7 million, and for the first quarter, it rose to $71.6 million. Since the high in 2021, its market cap collapsed from $10 billion to $686 million. But Blackstone made a huge fortune on this deal. Its IPO was when PE firm Blackstone began dumping this creature into the lap of the public in what has been an epic and perfectly legal pump and dump operation. In November 2019, Blackstone announced that it was buying a majority stake in Magic Lab for $2 billion. The deal values the whole company at $3 billion. Magic Lab owns the dating app Bumble, the international dating app Badoo, gay dating app Chappy, and over 50 dating app Lumen. The seller was Russian billionaire and Badoo founder Andrew Andreev, and he was out. Bumble founder and CEO Whitney Wolfe Herd became CEO of Magic Lab. Then comes the payday for Blackstone. It extracted a special dividend of $300 million from the company in typical PE firm manner. During the IPO in February 2021, Blackstone sold a chunk of its shares for $2 billion, leaving it with 98 million shares. In September 2021, in a secondary share offering, Blackstone dumped another 20 million shares for about $1 billion, bringing its haul to $3.3 billion from the sale of shares and the dividends. In March 2023, The 13DA filing with the SEC revealed that Blackstone had sold another 11.76 million shares, reducing its stake to 65 million shares, or 40% of Bumble. If it got an average of $35 a share, it would have produced another 467 million in proceeds, bringing the total to 3.7 billion. In March 2024, 13DF filings revealed that Blackstone had sold another 11 million shares, reducing its stake to 54 million shares, or 35% of Bumble. If it got an average of $15 a share, it would have produced another 175 million in proceeds, bringing the total to close to 4 billion on a 2 billion investment, while the public got wiped out. So Blackstone is likely still out there dumping its shares as the price collapses. It has been selling shares at a rate of about 1 million per month. By now, its stake might be down to 50 million shares. At $5.44 a share, or about 272 million at today's price, what's left is just dust for the public to clean. So there you have it. You have seen how a PE firm pump and dump a stock in the first-hand manner. And this is, not very staggering, but nothing to be surprised about. That's what every Wall Street firm does out there. And the retails can only be left holding the bags. This is a very unfortunate thing, but that's just how the game is structured. It's wired against the public and the retail investors. So yeah, I hope you find this video informational, and stay safe out there. I will see you in the next video.